Yes, but a warm welcome, friends. About 11 days ago, I told you in the video that in the next 10 days, things would explode. And funny enough, we were at $102,000 per Bitcoin here. And since then, we've gained almost another $10,000 per Bitcoin. So in the end, we have indeed gone up, but it's not what people were expecting. I gave you the reasoning for why we are rising. Namely, because we are following the M2 money supply exactly here. We definitely still had an upward trend, but especially with the altcoins, we're experiencing pain right now. And that's why we definitely need to talk about this. How much further can this whole thing go down? How much further can we fall here? And whether we should start to worry. And whether you should be worried depends on how and where you are invested. But how much further can this whole thing go down? In my opinion, all of this was just a test. I mean, we really had a very bad first quarter here. People actually thought that the year would start off with an altcoin season. With this, with that, but that wasn't the case. And things really didn't go well. Until suddenly, in the second quarter, we started performing really well out of nowhere. A project like Bitcoin dropped to just about $170. Crazy. But since then, this project has gained a relaxed 190%. And that's the thing again. In this area, suddenly people start coming back in. People suddenly start investing again because they become super bullish. Overnight, the market goes wild and people become super bullish. It's a little test to see how quickly people come back and to check whether people start investing in altcoins again and so on. But now you have to look at the bigger picture and consider things a bit more critically. In our trading VIP group, I already shared with you yesterday what we are currently seeing with Bitcoin, how we are approaching the whole situation, what we are observing here, and what we expect in the near future, as well as how we are trading here. And what I showed you is quite clear. We are rising along a nice line here, seeing another small breakout, testing this area again because it's simply a long-term resistance zone. And from here, we continue to rise. So far, this looks damn good. So far, it looks like we're continuing to follow the line. As if we now have the first upward trend here, we might come back again, and then it could continue from there. Because even if we extend this line, it's clear that the upward trend is still intact. Here is where we should find the turnaround, and here is where we should be able to keep rising, and then our next target would be $106,000 to $108,000. We also opened a long position in this area and did so with a 50x leverage. Our stop loss is then down here at $103,000. That's how the trade should look, and I would just say the trade is now live in the video, and we'll simply see over the next few days how the trade develops, because as I said, I'm convinced that from here on, Bitcoin will continue to rise. That's what I see from a market technical perspective, which I already shared with you last night. Still, the question remains, should we be worried here? Because there is one thing here that doesn't look so good at the moment. And I showed you this here. I showed you that it's extremely important for Bitcoin and the altcoins that we hold the 25 EMA, because if this trend doesn't hold for Bitcoin and it doesn't hold for the altcoins either, then that's really, really serious. Then it will definitely be painful. On the daily chart for Bitcoin, we can see that we've also encountered resistance here, but we're definitely still above it and are holding quite steadily around this area. And we haven't broken this trend yet, which is already very, very good. With the altcoins, however, we can see on the daily chart that we've definitely already broken through the 25 EMA in a sustained way and have lost this trend. It's also very clear this is not ideal, and accordingly, the altcoins are performing the way they are. They're currently not performing well, and that's exactly the reason why. The altcoins have definitely lost the trend here a bit. They've missed it somewhat. That's currently also the reason why all the money is flowing more into Bitcoin and why the altcoins are bleeding out again right now. But that doesn't mean that the altcoins are completely failing. As I said, it would be worse if Bitcoin also lost its trend. If both of those things happen, that would definitely be bad. That's not the case yet. We could also reclaim the trend with the altcoins relatively quickly. But of course, there's also a chance that we'll continue to lose the trend for now and that things will go well for Bitcoin for the time being. That's what it will come down to in the near future. But the fact is, as long as Bitcoin stays above this line, the altcoins won't completely crash. If Bitcoin and the altcoins lose the trend, then things will definitely get really ugly again, especially for the altcoins. However, I tend to think that in the coming weeks, we still have a good chance to keep rising, and I'll explain why. For one thing, as I've already shown you, every time we've tested the 50 EMA, we've had a nice, strong breakout. Based on time and data, we definitely still have time for a bigger push upwards, and there is certainly much more potential left. So just comparing this pump to the previous ones, we would definitely have the chance here to rise all the way up to $160, $70, or even $80,000 for Bitcoin. But of course, this would stretch out over several months. So for me, according to this indicator, we should definitely still be able to keep rising because, I mean, you can see for yourselves how meaningful this indicator is. We don't test it often, but when we do, we see a nice breakout. We've already seen that now, but I don't think this breakout is already overheated because you can also see that from other factors. I mean, the pullback that happened now, of course, was because we had liquidity down here. This correction simply happened because there's a lot of liquidity down here and things should always be somewhat balanced here. But there are still things that already show us that we're not overheated yet. One of those is the funding rate. If we take a look at it, we can see that during previous Bitcoin breakouts, like this first breakout here, we were clearly much more overheated in terms of the funding rate. There was also a lot of leverage in the market at that time, but we eventually became so extremely unbalanced that we needed a correction first. That's when the market makers had to step in. With a second push upwards, this one here we were, of course, also a bit more overheated. Right now, we can clearly see that we are still far from being overheated in terms of the funding rate. That means we still have some potential to move higher here. We're not yet so overheated that the market makers have to say, hey, that's enough fun for now. We need to initiate a correction. We haven't reached that point. It's exactly the same with the open interest premium indicator, which simply shows how much risk people are willing to take. During this first push, specifically this one here, people were already taking a lot of risks. You could see that we had already entered the green zone. We had a really strong breakout here. With the second push upwards, there was also more interest, more leverage in the market. The leverage in the market was unbalanced. We had a really strong push upwards. We spilled over into the green zone here. Currently, we are still in the red, but we have definitely fought our way back to today's all-time high. These two things already show me, okay, we do have a nice upward trend now, but we're not overheated yet because otherwise these indicators would be triggered. It's exactly the same with the social metrics. When we had the first breakout here, we were also slowly entering an overheated area. Well, not really overheated, but you could see that retail investors definitely came in here. New people were definitely recruited here. We definitely received more global interest in the crypto market. With the second push here, we actually received even more interest, and that was of course huge, which means we already saw a bit of retail activity there. And just look at where we are right now. We have had a nice upward trend, yes, but we are still far from having a retail-driven market. The social metrics feel as low as they've ever been. There really isn't much interest at the moment from retail investors or from the open market. And for me, that means we are not yet in overheated territory. The market makers don't need to step in yet. Of course, we still need interim corrections. So what we've just seen, a correction of 6 or 7%, is nothing when you put it in perspective, because we've just had an upward trend of nearly 40 to 50%. Of course, a minor correction of 10 or 20% isn't a big deal, and it was actually a bit overdue at some point. But overall, in my opinion, this upward trend is still not overheated because, as I just mentioned, I gave you all the numbers, data and facts. According to this data, we are simply not yet in overheated territory, and we are nowhere near seeing major retail interest. But to me, this also suggests that the people who are buying right now are more likely to be the whales, more likely to be institutional investors. That's also what the on-chain data is telling us. And that is definitely very, very positive. At this point, I hope you enjoyed this short and concise update video. If you enjoyed this video, please leave a like and a comment for the algorithm so that the video reaches as many people as possible. Thank you very much and see you in the next video.